Alright traders, welcome back to another day trading with the team. I'm Orlando and this is Learn to Trade. Today we're going to have a look again at the US dollar after yesterday's FOMC day. So we had a big hourly bullish candle on the DXY. And what happened yesterday is that the Fed maintained their asset purchasing program and the interest rate close to zero. But Powell said that if progress continues, tapering will be warranted soon, right? And more Federal Reserve officials see a taper starting next year. So let's go down to the countdown to FOMC, the watch tool from the CME group, and well, as you can see, the percentage of or the probability for a rate hike in November, December, January 2022, March 2022, etc. remains at 2.1%. Now, if we go to May, to June, here is where we see a possible rate hike with a 10.3% probability of a 25 base point hike in the interest rate. So, kind of hawkish sentiment on the future of this round of quantitative easing, but still we remain under the same parameters of this asset purchasing program. So this is why we had that big spike on the US dollar, and now yesterday's highs are capping the upside on the DXY. Now the thing about this is that if we look at a daily chart, right, if we look at the daily chart, this daily candle looks extremely bearish, right? But looking at the lower time frames, let's start with the 4-hour chart, right? Looking at the 4-hour chart, we still have that very strong level of support, or those highs, the August 24 to August 27 highs, these ones right here, acting as support and capping the downside on the DXY, right? More so because also we made a new higher a new daily higher high, and we have seen twice buyers jump in at this level. So we cannot be certain of a break of the 93 level and a bearish continuation on the USD. So what we're going to do, or what I am going to do, let me show you the hourly chart. I'm going to wait to see the reaction, the real reaction to the same level, to the 90 to 93 level, or those lows. And depending on that, I might just go long on the US dollar on a strong pullback and strong rejection, or the other scenario would be a short on a breakup. But because of these big weeks that we've had, this is of course a rejection, big buyers jumping in. I need a clean break and a clean retest of that 93.10 level to be able to go short on the USD, right? But the other thing that concerns me a little bit is for bulls on the US dollar is that false breakout of this flag. The past two times that we traded the upside on the US dollar on a flag breakout and on a structure breakout, we had a clean move of about 0.5% the first time, and I reckon this is a little bit the same, 0.68% the second time, right? So this is very choppy. This is very choppy and very ranging. And right now, the DXY is in no man's land, right? For me, there is no trade, or whether to the upside or to the downside. I'm just going to have to wait to see clear direction on this market. Now, the Japanese yen broke with that base that we were trying to buy into, and right now shorts are gone, right? But there's a possibility of a retest of the previous broken level, in which case we are going to look for Japanese yen shorts, maybe by buying the pound yen. I mean, the pound yen is not that clear. Let's have a look at other Japanese yen pairs. The Aussie yen. I mean, the pullback on these markets should not. I mean, it's not going to be that big. So the one that I'm looking for is the CAD yen, actually, right? Let's have a look at those levels on the CAD yen. The level that I'm looking for is the 86.30 for that pullback. If the Japanese yen rallies towards that previous broken base, the CAD yen is going to drop towards that previous broken highs around the 86.30 level. And this is where I'm going to find a great risk to reward ratio for a long on this market. Obviously, by the rationale by going short on the Japanese yen. Now, the other market that I want to look at, I mean, gold. We are in a gold long at the moment with the VAP chain. And this is the actual trade. This is the actual trade on gold right now. So the idea here, we went long on gold, right? And the idea here is just to wait to see the reaction of the 1769.50 level or these previous highs. Let me just show you by inserting a rectangle, right? These previous highs, right? Should gold break with these highs and go lower, I will close all my gold longs at that time. But if we have a retest and a clean rejection, then my position on gold is going to be golden. Right. And the other one, just to finish up, is Ethereum and Bitcoin, right? Let's have a look at Ethereum Bitcoin, on the daily. Right, and both of these cryptocurrencies are retesting the previous broken lows. Let me show you Bitcoin first on the 1 hour chart. Right, so the retest in Bitcoin is not that clear in the sense that this hourly candle closed above the 44,000 level. But in Ethereum, that retest is super clear, right? Right now, I don't think there's a setup to go short still, right? But because of the structure in this market, is very, very clean. So what I'm waiting for is a clean break of the structure for possible shorts in Ethereum, right? And where would that be? Right, let's go to the even lower time frames, to the 15-minute chart or so, just to see where the lows that need to break are. Well, the first one is, of course, this previous base right here. But to be completely honest, I wouldn't be short on a momentum breakout of the 31,000 level. 3,100 level, I'm sorry, just because this is yesterday's highs, right? The level that was capping the upside on the short term in Ethereum. So, if I were to look for shorts in this market, possibly would be at the break of the 3045 of the 3045 level, or these lows right here, giving me a let's have a look at the risk to reward ratio, at the possible risk to reward ratio on this short in Ethereum. I know that some of you might think that entry is a little bit too late on the move, but to me, a break of these highs does not validate a reversal, more so because we are talking about a move from the lows to the highs, of about 18%. So this is clearly very, very bullish. And the current structure in the market, I mean, it's clearly very bullish too. We keep making on higher lows and higher highs, and I wouldn't want to be tagged in or filled on a false breakout to the downside. Even though this level is very strong, I'm gonna have to wait for these lows to break. I mean, and to be completely honest, this should be, or the 3,000 levels should be the entry. But I mean, let's assume that that we have a clean couple of bearish candles and a clean break of these two levels. Let's have a look at that possible risk to reward ratio on a short in Ethereum here to the ADR lows. That would give me a 1 to 2 risk to reward ratio, and yeah, I mean a 2-hour win on a short in Ethereum. Now this is clearly very, very mature. We need to see what we need to see the real reaction of those previous broken lows, if it's really going into fall, or if we're going to have a let's go to the hourly, because this is the other scenario, right? The bullish scenario would be, in fact, a retest of these levels that I showed you in a continuation. That's the main reason that I don't want to short right now. And yeah, so this is the main reason that I don't want to short right now. And I'll keep you guys posted on what I do. But just by looking at it, it's really setting up like a great short opportunity, right? So let's have a let's look at gold and our gold trade. Right now, what I'm seeing in gold in the short time frames is the 5-minute chart. The only reason that I have the 5-minute chart here is just to show you what's going on. I like this clean break of the 1770 level, right? I do like that clean break of the 1770 level, and it seems to be that on the very short term, on the very short time frames, we're creating a bullish flag. So I'll keep you guys posted on what I do with this trade. Of course, if you're a VIP, you're going to get all my updates on trade management. If you want to be part of that, there's a link below this video.